Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's Dave Stendhal with tonight's Deep Dive. It is January 17, 2018, and tonight's market comes from one of our customers that wanted me to take a look at the US dollar index. The ETF here is UUP. Now, right now, the short, intermediate, and long-term trend are all pointed to the downside, but we have certain conditions that are starting to pop up here, so the technical rating is actually positive. Now, just with today's action, the reason I waited to look over this particular market is that we actually had a pivot low that occurred, and a pivot low is just an early warning signal. The slow low that you see right here, it's either going to be a slow low or a pivot low or a slow high or a pivot high. There's just four things that are going to pop up here. And in the dollar index, we have a pivot low, which is the first round of things. We'd actually like to see more of a slow low, but we're seeing the early warning signals here of a pivot low. The sub is based on the power level, and similar to what we're seeing here in the 10-year notes, the preferred tool or the preferred alert that we'd be looking at would be more of a slow sub, which means that we've had a signal, the market has continued to meander to the side, maybe down a little bit further, and then we get a slow low or a slow sub, and we get another signal. And it's the secondary signal. It typically is a little bit better. So specifically to the US dollar index, we have a slow low and a sub, early warning signals. If we take a look at the patterns, we have a surge low and a pop low that occurred today. And so that's part of the reason we're looking at this thing. Again, it's, I think, a little premature to be buying here, and you'll see with our systems what's taking place, but it's an early warning signal that you should start to at least look at it, because opportunity is brewing. It may not necessarily be here right now. So if we take a look at the dollar index, inside of TradeStation, we have daily bars here. Each of these green bars is a day, and you can see that there's a little bit of a pop here. So we had a sell-off yesterday, and it completely rebounded from yesterday's action. And it is playing and toying with this major support right here. So you can see with, it might be hard to see it, but yesterday's action, we broke it, fell below it. Today's action, we broke back above it, or we're basically sitting at, right now, this support. So we're going to watch this market here fairly closely. There's enough that's taking place here that I think it's premature to be getting into a position, but it certainly warrants starting to watch, because opportunity is going to arise if things kind of play out here. So we talked about the pivot low in our elastic level. Here's that indicator. I talked about the power level sub low, which is right through here. So these are popping up as we speak. If we take a look at the pattern side, we kind of get cut off here, but you can see the trend to the downside, still trending to the downside. And what we had was, it's hard to see it here, but on this particular bar, we actually had a surge low and a pop bottom. Very early warning signals that something is happening. It's worth taking a flyer, but more of a trader or investment side, it's probably best to put it on the watch list as an opportunity to get into a particular position. So let's take a look here. When we take a look at the general trend to the market, you can see that the trend had been down. We have a little bit of a pop, and now we have this continued sell-off here. And what we're going to be watching for is the potential for a bottoming here. There's always the possibility that the trend could continue to the downside, but we're going to start looking, because of some of these early warning signals that I just addressed, for an opportunity for the market to actually head a little bit higher. It's not here yet. The other thing that I want to point out is that the systems are having difficulty with this environment. So I'm sure a lot of services always point to always the best trades and always making money and all the things that are great and glorious about trading. Well, here we had an interesting situation here today. So I always like to be upfront with everything that we're doing. Today being the 17th, we went long, and we had another system that went short. And now we're hedged, long and short. Two different systems. The account would show 0, but we know behind the scenes that we're long one system and short another. There's confusion in the market with the sell-off that we had yesterday and the reversal today, and the reaction to that that transition, if you will, has caused some of our systems, short-term as they are, 60-minute to go long, and another one, totally different style, different trading system, to go short the market. So we got a 60 and a 90-minute. One's pattern-based, one is swing-based. So long story short is that I point this out because one of these two systems is probably going to be correct. We don't know which one. A lot of it is based upon that support level that I was talking about. In general, I just want to show this as well, as if we grade, as we always do, all of our markets, the dollar index is a B market. Maybe not be an A market, but it certainly isn't a lower quality. So it's definitely a premium market. So I just want to point this out, that we have this confusion going on with being long and short simultaneously, hedged obviously, but it's still a quality market. So I want to point that out. It's a solid high B market. Maybe it's not an A, but it certainly is a quality high B type market. So where do we think the market's going, and how we're going to play this? Obviously, we're going to follow the systems, but the seasonal tendencies to the market with a 21-day projection. And this is based on yesterday's action, not the 15th, but the 16th, that we would be looking at the 27th, or basically in the next few 10 days or so, we would expect the market to have some chop to it. No surprise with that support level that we've been talking about, that in and around the 27th, obviously there's nothing hard and fast to that particular day. It just simply says it's not happening now, and we should probably wait for a little bit, as I alluded to with that sub low and that pivot low that I was referring to, that what we want to do is just simply wait for a little bit, see how things kind of react, and if we can get a little bit of a tradable pop to the market if we just simply wait for a week or so. So from that standpoint, that's tonight's deep dive, where we're not necessarily saying that we should execute and go long a particular position, even though the systems entered into both a long and a short. There's confusion that's out there, and I just like to be upfront with what's taking place and how we go about hedging ourselves, how the fact that as a systematic trader as opposed to a discretionary trader, we can view the markets from a systems perspective, in that we're able to watch two different types of trading systems, two different time frames, and be able to come to two different conclusions as to where the market is potentially headed. And based upon that, they will have their own separate viewpoint, and we'll see where the market kind of goes from here, and we'll see as to whether we liquidate one, obviously, and potentially add to positions on the flip side, whatever the case may be. But with the fact that we came down to that support level, again, I'll point this out here, that key level, that support level is 90.50, we'll call it, and we're essentially there right now, just a hair above it. But this is the key right here. And if we're able to get this market to head a little bit higher, that eventually will turn the trends. It will then continue to look at the technicals as still being positive, and that these early warning signals that I pointed out here with the elastic level, the power level, and then the two that actually triggered today as far as the patterns with the surge low and the pop bottom, just simply different things, different indicators, different alerts that are telling us that there's opportunity to be had on the long side. But as I mentioned, obviously with the seasonal tendencies and the confusion with the long-short positions, it's probably a little premature. So let's watch and see how things kind of play out here over the course of the next week to maybe 10 days, thereabouts. and then from that standpoint, see as whether or not the market is able to give us some clearer indication as to what is going to take place. So if you have other questions, I really do enjoy some of the questions that I'm getting now that I've been doing these deep dives for a period of time. I'm starting getting a little bit of a following. People are starting to ask questions. So if you do want to ask a question, you just simply come to the website, go down to contacts, and it'll come up with a page where you can sort of fill out some information. I'm not going to address it back to you individually. What I'll do is make note of the fact that you're asking about the market, and when it's warranted based upon the patterns or the indicators or the systems or the seasonals or whatever, that there's something that is justifying to look at that particular market, I'll address it at that particular time. So that being the case, that's what we're doing with the dollar index. If you have any questions, if you have any other things, obviously come to the contact page. Otherwise, stay tuned and we'll continue to look at the dollar index and some other markets going forward. Thanks very much. Bye-bye.